All right, welcome to our channel. My name is Jeff Boom, joined with Nick Kiso. We are both with the Fairway Heartland branch, and we're excited today that you're joining us. Today, we're going to tackle the topic of South Dakota Housing first-time homebuyer program. And Nick, you and I, having been in this business for the last couple of decades, I think it would be safe to say that we've worked with hundreds, if maybe not 1,000 or more first-time home buyers. So it's a topic that you and I know pretty well, but a lot of people come to us that are interested in buying their first home. And inevitably the question is, do I qualify for first-time home buyers? Which is that fair to say?
Yes, most borrowers come to us, that first timers wanting to know how they get that program or apply for that program, and it really starts with us. We start with the pre-approval process, just as normal. Taking information from the customer, pulling a current report, looking at their income, and then from there we apply the program, South Dakota Housing first-time home buyer, see what they're eligible for, and see how it can benefit them.
Sure. So I think there's a misconception out there. A lot of people will think that South Dakota Housing is essentially what's going to approve them. And you and I know that that's not the case. So Nick, if I came in off the street and I wanted to come and I'm visiting with you and I want to buy my first home, what is kind of the first steps other than obviously I need to complete an application and give you my personal information, but if you were talking to me about loan programs, where would you start?
Yeah. For, the first step in the big conversation that we would have with the first time home buyer is payment, what they want to keep things around, making sure that we're looking in the right home price for them. And then down payment, do they have any money of their own to put down? And if not, that's okay, because South Dakota Housing does have a down payment assistance program that they can provide and help these customers not have to use their own funds, even if they had some, to help buy a house.
All right. So let's start from the beginning. So we know that South Dakota Housing has a program, and we'll get to that in a second. We'll talk about the interest rates and some of the features of South Dakota Housing, but until we know that someone's approved, the South Dakota Housing feature doesn't mean a whole lot, correct?
Yes,
And
yes.
so, what are the different loan programs? If I came in and visited with you, or if someone came in and visited with what would be the loan programs that we typically would cover to see if someone's actually approved?
Yes. So we are able to offer conventional loans, FHA loans, veterans loans or VA loans, and USDA or rural development loans. And each of those four loan programs have their own subtle nuances, depending on your credit, veteran status, or location of the property that you're planning on purchasing.
Yeah. So when we talked about getting approved, really the first part is one to identify credit profile, and then we have to identify some job stability, some other things, and I think a lot of people when they come in to buy their first home, their first fear is I don't want to be told no. And so it doesn't always require that you have what we would call deep credit, meaning that you've borrowed a lot of money in the past. I think that a lot of people are able to buy a home that maybe have had an auto loan, and you and I've seen it too, or maybe we just have student loans out there, and that's enough for them to qualify for their first home. And so the credit's always one portion of it, and then obviously they need to have a job in order to do that as well. So we look at all those types of features, and then we're able to identify some things. So let's just dive into a couple of these, and we'll just go, or let's talk about all four, and we can kind of discuss what are some of those subtle nuances. And so, we know that conventional financing is one that people will hear of. And so conventional financing, Nick, just give us a couple of the small nuances that come along with conventional financing.
Yes. So for conventional financing, you're looking at a minimum down payment of only 3% of the purchase price. You can certainly put more, but 3% is the minimum. It does have mortgage insurance or PMI associated with the payment. And that does, start in your payment, and it does decrease as you make your payments and eventually can go away once you reach that 20% equity position.
Yeah, and then so I think the credit profile of conventional is typically going to be someone that's maybe experienced a little bit of credit in their past too, correct?
You are correct there. The minimum credit score we'd be looking for would be 620, but often for conventional, we see the customers have scores in the 700s or so.
Correct. So maybe a little more experience, and then typically really clean credit history as well, where you don't have late payments and definitely not collections and those types of things, unless they're considerably further back. And then let's talk about the next program that seems to be, you and I would probably agree, one of the most popular programs when we're talking with first-time home buyers, which is called FHA. And with FHA, Nick, go ahead and give us a couple of the details that go along with FHA and what kind of person you or credit profile would kind of fit with that.
Yeah, absolutely. FHA is extremely popular. Most often, the customers that are using that program probably have a credit score somewhere in the 600s. It does take a little bit broader look at it and to include more people that maybe don't have the credit experience that are able to go conventional. With FHA, the minimum down payment is only 3.5% of the purchase price. It does also have mortgage insurance, just like conventional. Will stick on the loan as you pay down, so eventually in the future, your credit improves and you can refinance out of that loan program and get rid of that PMI.
So we have to couple there's some good and there's some bad that goes along with the FHA, but you alluded to it. Maybe your credit's not perfect. Maybe you haven't borrowed a whole lot of money in the past, but it still gives you an avenue to buy your first home. And I would dare say that I was probably one of them that used FHA as well when I bought my first home. So let's move on to the other one that you had mentioned, and that's called the VA through the Veterans Administration. And so who's the typical candidate that fits for that? And give us some of the details of what that looks like.
For the VA program, you'd be a military veteran or an active duty military member, and has a couple great features, one of which is no down payment required. So 100% financing is offered with this program, and they do not have mortgage insurance in their payment. So your payment is only going to consist of principal and interest, property taxes, and homeowners insurance. So it certainly helps you there.
Right. And then so the last one, you'd referred to it, USDA, also known as rural development. Little different restrictions to this one that maybe aren't as credit related as it is property related. So Nick, why don't you talk just a little bit about the rural development loan?
For sure. For rural development, their requirement is you have to purchase in certain areas. And those areas for South Dakota are going to be outside the city limits of Sioux Falls, Rapid City, Aberdeen. So if you're thinking of the Sioux Falls area, you can get as close as Harrisburg, T, Brandon, Del Rapids, and utilize this program. This program also does not require a down payment, so you can get in with 100% financing, similar to the VA program, as long as you're purchasing in these areas.
Sure. So now we've covered the 4 programs. Let's assume that I qualify for one of them. Now we can start to talk about the South Dakota Housing, and which way most of the listeners or viewers today are here on the screen to give you an idea of what this program looks like. And so you can definitely see that there's what they call the first-time homebuyer program with government loans, and there's also one with conventional. And so Nick, talk to us a little bit about like what's government, what's conventional. I know it's here on the graphic, but what are the differences there?
Yeah, so the government bucket, the 3 that consist of that are the RD, FHA, and VA loans that we covered. And then conventional has its own separate category for the interest rates. And each interest rate listed there, there's a few different categories. One, you can take no down payment assistance. One, you can pay a little bit of a discount point and get a lower rate. Or you can take one of the 2 levels of down payment assistance that's offered and take different rates for that.
And I think most people, when they come to buy their first home, you typically don't have a whole lot of money. And the other part of it too is how much of that money do you want to use? And so we had talked about it just a little bit ago about with a conventional financing need 3% down payment. But we also have that pesky thing called closing fees and prepaids, which we pay your homeowner's insurance and some of those costs that are up front. So Nick, talk to us a little bit about those two options. You have a 3% down payment assistance, and then you have a 5% down payment assistance. Why would I pick one over the other? Because if I only need a 3% down payment, would it not make sense for me to just to take the 3% down payment assistance?
It would if you have the money on your own to pay for those closing costs and prepaid items that you mentioned. It could also be negotiated and have the seller pay them as well. But that's, a case by case basis depending on the property that you're purchasing. If you don't have your own funds to cover those extra costs outside of the down payment, then opting for the 5% assistance from South Dakota Housing is probably going to be in your best interest, simply because you can then get into a home with really nothing out of pocket or as close to as possible.
Right. So minimum down payment, and then let's talk about these interest rates. These interest rates that we're on here, they're not the same rates that stay forever. They obviously change with the market as well, but it's not as frequent as what we see in our typical financing. But when we look at these rates, Nick, would you say that these rates are more competitive than what we have in a traditional financing?
Most definitely, for non-first time home buyers, not utilizing the program, you're going to be looking at a higher rate than what's being offered with this program. Even if taking the assistance and the higher rate, it still is going to put you in a very, very good position.
So financially, it seems to make the most sense to use this program. Now, there are a couple disqualifiers, and this is the one thing where sometimes people say, do I qualify? It's not necessarily can you get approved for South Dakota Housing, but do you fit within the buckets that they have? So Nick, talk to us a little bit about what's one of the major restrictions that we have.
It's the income limits. South Dakota Housing lays out income limits based on the county that you're looking to purchase a home in. And as long as you're under those limits, you could be eligible to use their program. Um, we, when talking to customers, we see income, commission, bonus, overtime. All of that is taken into account when looking at your income to see if you can fit within their program guidelines.
Yeah, and today we live in a world where there's a lot of side hustles. And so someone might come and say, well, I make $60,000 on my job. My wife makes $30,000 on her job, or my husband makes $30,000 on my job. And then we've got this side hustle over here, but we don't really need to talk about that. That's not income. It's just something that we do on the side. But you and I both know that side hustle income might be the difference between someone qualifying for South Dakota Housing and not qualifying for South Dakota Housing. And so it may seem irrelevant or maybe something you want to hide, but trust me, it will eventually be uncovered via bank statements or some other source. So it's best just to be completely upfront and talk about all those income sources upfront so that we know what we're dealing with. So, in speaking of the income, I just mentioned that we have spouses and other people. What is the household income? What does that mean? Because South Dakota Housing, we have the income limits, but it says household income. What does that refer to?
So there are a couple different categories. They separate income and their income limits by a household of two people or less, or three people or more. So you, your wife, a child, anyone who's going to live in the home is going to be considered into that income limit.
And so we talked about having multiple people in a home. If I'm buying a home and I'm gonna be the sole owner, I'm buying it, and I know I have some friends that eventually will want to move in, but it's not going to be their permanent residence. Do I need to go and find out who's going to live with me at some point and get their W-2s and pay stubs, or can I qualify on my own?
In that instance, you'd be able to qualify on your own. You're the only one that's going to be occupying the home as its permanent resident.
And so let's talk about one last thing when it comes to income limits. We know that from time to time someone may come in and let's just use for an example that they qualified for FHA financing, but there was a few things in there that maybe we said, you could be approved, but you got a few things in here that could be problematic. Or maybe we have an option where someone says that we qualify for FHA, but we need some additional income in order to make the debt to income ratio work. Is there an option for someone to bring a parent or someone else that's an immediate family member into the loan application?
Yeah, there is. That would be what they call a non-occupant co-borrower. So someone who's not going to live in the home with you, like a parent, we can use their credit, use their income to help be able to for the person to purchase maybe a higher purchase price and get a home that they want. And when you have that non-occupant co-borrower, that income doesn't count towards the income limit for the program. So it is a great way, assuming that the occupant borrower can afford the payment and is comfortable with it. It's a great way for them to, maximize their purchase price.
So there are options. Doesn't always have to be just the person that's qualifying. And I think that the non-occupant co-borrower, sometimes we have a parent that says, I'm willing to go in and help you out on this. And speaking of parents, a lot of times what will happen with parents is we know that my son or daughter or someone that we have in our household wants to buy a home, and we'd like to give them $10,000 in order to get that started. If you were gifted $10,000 and you had the option to take the down payment assistance, what would be the best way to think that you would probably utilize that money?
So yeah, being gifted that money is perfectly acceptable for when obtaining a loan. Just a couple steps that we do to document that process, and that money can be used towards your down payment, your closing costs. It can use in substitute of the down payment assistance or in combination of to lower your loan amount down as much as possible and subsequently lower your payment as well.
Sure. And I think that there's times you and I've had many conversations about this. If someone has a large chunk of money, it can be used for down payment. It can be used for closing fees. One thing that I think that you and I typically suggest is maybe you want to keep just a portion of that because there's things inside of your home that you don't own today. Maybe you need some new furniture. Maybe there's appliances that are old or missing in the home. And then there's that thing called a lawnmower, snow blower, garden utensils, and those types of things. So I think a lot of times people may say, hey, I've got the money. I want to use it all towards the home. But we have to think beyond of what happens after closing. If you're interested in more tips and tricks and common mistakes for first-time home buyers, check out another video on our channel where Chase Loggy describes common mistakes from first-time home buyers. So Nick, as we talked about the income limits, there's one other limit that's associated with South Dakota Housing as well. And what can you explain what that is?
Yeah, that's called their repeat homebuyer program. So you can have owned a home before, and if you sell it to purchase another home, and maybe you're not making as much equity as you had hoped, and need to put more money down, the South Dakota Housing Repeat Homebuyer Program does provide down payment assistance if necessary, or very competitive rates too.
Right. So inside of the restrictions that we have, you have an income limit, and then there's also what they call a purchase price limit too. So what does that mean, Nick? Does that mean that I can't buy a house over that, or does that mean I can't borrow money over and above that?
You can't buy a house over that. So the purchase price limit, you must purchase a home at that or less than amount listed there for both existing home and new construction.
And I think a lot of viewers might say, well, what if I want to buy a house more than that? The one thing that I think that the math basically takes care of itself. Once you've reached a certain purchase price, and assuming that you don't have a large down payment, typically you would need a significant amount of income in order to qualify that. Hence, there's purchase price limits and income limits that basically work in conjunction with themselves. And so, Nick, let's talk about the one last program because this one is new, and it would really probably incorporate a lot of people out there, considering it goes back in time, and it's called the Grants for Grads. Can you give us some basic details of the Grants for Grads?
Yes, that program is new. They've done it in the past, but they brought it back. And the rate that they offer is their base rate that you would obtain if you didn't take down payment assistance. But the caveat with the Grants for Grads is they will gift you or grant you 5% of your loan amount to be used for your down payment and closing costs, and that money does not have to get paid back. Under the traditional down payment assistance programs that they offer, that money is paid back in the future when you sell or refinance the home. But under the grants for grads, it is yours. It is completely forgiven. The caveat to qualify for that grants for grads, you have to prove that you've graduated from a college or technical school within the last 60 months.
So 5 years, I've graduated, I come in, I get this really fantastic interest rate, really unheard of in today's market, and I get 5% of my loan amount gifted or granted to me that I never have to repay back.
That's right.
Exceptional program. And this is the one that, as I mentioned, it's new. And I think this is a program that, as you mentioned, resembles what the South Dakota Housing Program used to do, and when they gift it. And it will have a shelf life. There's only so long that this money will be available. So if you're viewing this and the program is still available, I would encourage you to take advantage of it sooner than later, as eventually this program probably will be dismissed. But you'll still have all these excellent other programs that will be available to you as well. So Nick, I think we covered most of the topics when it comes down to first-time home buyers. I think the next part of it would be what if someone said, "Hey, I'm interested in buying my first home." What documentation should they bring to you to help you to get this whole process off the ground?
Yeah, generally speaking, the documents that are going to be needed are photo ID, pay stubs covering 30 days, 2 months of bank statements, and a couple years of W-2s. Tax returns may be needed if you're self-employed, but for the most part, the basics of what we laid out there with assets and bank statement, or excuse me, assets and pay stubs, will be able to get us started.
Well, excellent. Well, Nick, thank you so much. You've given us a ton of information about first-time home buyers today. If you found this video helpful, please give us a thumbs up, subscribe, and share this with others that could also benefit from this information.